All right, in this video, we are going to get into the fun part. Review the final options before starting your policy. So the underwriting is complete, a lot of information there to build additional awareness. But when it comes to reviewing options, what we want to do here is everything we covered initially, as far as the initial policy options, what you had narrowed things down to, hey, I like Mass Mutual, I like Guardian, I like a combination of both. Maybe it was a smaller carrier. Whatever your situation is, what do the numbers look like? The final numbers with your actual health rating, real time, what do things look like based on your approval? We put that together for you, go over everything again as a refresher, answer any questions you might have, very similar to the initial process, because this stuff can be challenging to remember. Right? It's difficult for me to remember if I go to a doctor and they tell me, hey, here's your condition, here's a million things that I'm telling you. I'm like, okay, I'm going to remember 1% of this. But the more you go over it, the more of a refresher you provide, the more follow-up information you email to me, the better, because then I'm like, all right, I get it now. So we try and do that for everyone. So what we like to look at, policy options, final numbers, what do things look like with the actual approval rating you had received. This one's important, policy date. So if you say, okay, I'm ready to start the policy, but I want to backdate the policy. Maybe it was a case where we applied for a policy, let's say back in January. So we applied in January, and we were approved in June. Usually does not take that long, but let's pretend it took a long time because we had to track down medical records, or the insurance company did. And you said, man, I lost all that time. I was looking forward to getting my money into the policy early on. Well, because we applied in January, we could actually lock in a policy date that still has January. Or if I'm backdating a policy based on my birthday and when I'm starting the policy or my application date, I can still backdate to save age. And then when I actually make the base premium payment, that is applied on that policy date. Now, PUA payments are applied on the actual date I make them, which is important to be aware of. But policy dating is important. It doesn't happen all the time, but it depends on the timing of your policy. If you'd like to backdate the policy, it's nice. Most people don't. They say, hey, I'm starting the policy today. I'd like to make the next payment 12 months from now in respect to the minimum premium. So let's start it with today's date. But the policy date is good to be aware of. And your agent likely went over that with you as well, or they will. Awareness. So this is important here. During the initial process, there's a lot of stuff we go over with you. We've got a lot of content on YouTube. We likely sent you a lot of videos. There are a small number of key videos we will send you, and you'll have access to these forever, but these are not public videos. For example, PUA fees. All companies have PUA rider fees. If I made a $10,000 PUA payment, I'm expecting that to do what? Go up in cash value, I can access it, begins compounding, which it does. However, depending on the insurance company, when I make that $10,000 PUA payment, I might see $9,000, $9,300, $9,500 show up in cash value in the first year. Depends on the company and product. But if I make a $10K payment and I see $9,200 show up in cash value, my question would be, where's the other $800? Like, what's going on here? Especially if it's a $100,000 payment and $8,000 doesn't show up in cash value, like that's a big amount. Well, all companies have different PUA fees. Now, you may have seen these videos we have already, but we break down exactly how they work with different insurance companies, products, what their actual PUA fees are, because it's important to know that. I do not want to make a payment and be surprised, because then I feel like, I wish you would have told me about that. Couple specific examples. We've got Guardian loans and Mass Mutual LISR. So what I mean here, Guardian loans, when I have a Guardian policy, when I make a PUA payment or loan repayment, Guardian standard practice is to wait 10 business days, which could be 2.5 weeks, before I can turn around and request a loan. They want to make sure that the funds clear from the bank account, my bank account's end. Now, there's ways to accelerate that by providing a bank statement, screenshot of all of my information associated with my bank account. But my point is that is something that I want awareness on, because if I plan to make a loan repayment or a PUA payment and say, hey, an opportunity popped up, I'm gonna be able to borrow my money, and the company says, hold up, we're gonna wait 10 business days. You're like, time's money, man, I gotta get things going. It doesn't always work well. So if I know that up front, I can properly plan or know, Steve, IBC Global, what specifically is needed on my end to ensure I don't have to wait the 10 business days. Because you can get it much quicker if we provide all of the information like a bank statement or some type of transaction history up front. Mass Mutual's LISR letter. This is another example. So if you have LISR, Life Insurance Supplement Rider, if you have that attached to a Mass Mutual policy, which we attach to almost every policy because it creates a ton of flexibility where you can bounce payments up and down, when you have that attached, Mass Mutual will send you a letter each year. So the reason why is this is actually a blended PUA. It is a 1-year term insurance rider. Refresher on how that works. As you pump money into a whole life insurance policy, as dividends are paid to your whole life insurance policy, what happens with your whole life death benefit? Gradually increases over time. If you have a 1-year term rider attached, what happens is as you pump money into that whole life insurance product, the whole life death benefit goes up, the term rider comes down. Now what Mass Mutual does is they say, okay, this rider is attached. It is priced right now to last until the individual is age 100. And also, depending on our company's dividend interest rate, dividends help support that term cost. So if the dividend rate goes down, which it has for the past several years now, what Mass Mutual does is they send you a letter saying your current LISR premium may not be sufficient. You're presently paying $1,000. We recommend that you pay $5,000 this year to support the term cost through age 100. They don't say through age 100. My point with this letter, you can completely disregard it. Where it's important is if someone is very, very focused on death benefit only. When we're designing policies for high cash value, we'll use a combination of LISR and AILR, which have to do with the cash value and death benefit over time. But mainly, with that term rider, anytime after year 7, you can cut it off. So Mass Mutual is sending you this letter saying, hey, here's the amount of money needed to keep this term forever. But then you say, I'm going to chop this thing off after 7 years anyway. I don't need it anymore. My point is we can disregard the letter. It is something we monitor as well. And with LISR, that allows you to make big catch-up payments over time as far as adding huge PUAs to the policy. That often alleviates any issues with that letter as well. Your agent can provide more information. We've got more videos on both of these subjects and other topics as well. Dividends. How and when will they be paid? Did you know that dividends with most whole life insurance policies are not paid in the first year? Some are, but most aren't. On an illustration, we'll often see dividends begin year 2, but they're paid at the end of the second year, end of the policy year. So at that point in time, I'll see a lump sum payment come to my policy in respect to the projected dividend payout. If we pull up an example here, actually, let's look at this guy. So here we see a policy. What do we notice here? Just $100K for 5 years, but here's what I want to touch on. He makes his $100,000 payment. There's his cash value in the first year. If we look at the dividend column, what do we notice there? Zippo, nothing paid out. Dividends typically are not paid in the first year. Another thing to add, the dividend does not include, I should say the dividend column, and what you receive on your statement does not include the guaranteed rate, which depending on the company when you purchase the product could be anywhere from 2 to 4%, since the 7702 change that is. But year 2, let's say we run the in-force illustration, your projected dividend payout is $49.17. When will you receive that? Well, you will see it occur at the end of your policy year. So if your policy date was October 11th, 2021, then October 11th, 2022, assuming that's the end of the second year, is when you would see that apply to your policy. Now, to take this a step further, where I mentioned that this column does not include the guaranteed rate, look at this example. What do you notice at age 60? Here's our dividend column, $22,000 and change. Our payment was $10,000. Okay, so if we add those two together, you paid in $10,000, you have a dividend payout of $22,000, which means your cash value would grow by what? $32,000 if I add those two together. Yet when I look at this guy, I'm at $885, and I grow to $933, almost $934. So I get $15K back to get me up to $900, and then almost another $34,000, which is more than these two combined. People look at this and say, wait a minute, how do these dividends work? It can be quite confusing. Well, what's happening here is I received the $10K payment I made. I received the dividend, which remember does not include the guaranteed rate. What's included in that net cash value column is any premium payments, dividends, and the guaranteed rate. That includes all of the interest credited or applied to the policy. So my point to this, and we've got videos that go through all of these in much more detail, those are just quick examples I provided there, is we want to always build awareness on these topics because we don't want anyone to get into a policy and then find out after the fact, oh, I didn't know that. Only if I would have known, then it would have been nice. I would have set expectations differently, whatever it may have been. So hope this one helped in respect to options. Next, we're going to look at making the policy official and starting it. Hope this helped.